Welcome to Smart Stock Watch. Today is May 15th, 2025, and we're diving into the latest earnings report from TriSalus Life Sciences, a company at the forefront of oncology technology. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TriSalus has been making significant strides in the oncology space, and their Q1 2025 earnings report provides a lot of insights into their current performance and future direction.
Revenue and profitability overview. Let's start with the top line. TriSalus Life Sciences reported a net revenue of $9.2 million for the first quarter of 2025, which is a 42% increase year over year. John, can you elaborate on what drove this impressive growth?
Absolutely. The revenue growth was primarily driven by the increased adoption of their TriNav system, which is part of their proprietary pressure-enabled drug delivery technology. This system has seen expanded use in liver embolization and new clinical settings, contributing significantly to their top-line growth.
And what about their profitability metrics?
While they reported an operating loss of $7.3 million, it's a marked improvement from the $11.7 million loss in the same period last year. This improvement is largely due to increased sales and reduced R&D expenses as they ramp down clinical trial spending.
Strategic investments and market expansion. TriSalus has also been making strategic investments. Can you tell us more about their recent activities and how these are expected to impact their future performance?
TriSalus raised $22 million through a private placement, which they are using to expand their sales force and clinical registries. They've also launched new products like TriNav LV and TriGuide, which expand their PEDD technology to larger vessels, broadening their clinical utility. These investments are aimed at driving long-term growth and expanding their market presence.
And how does this align with their updated 2025 guidance?
They've confirmed a revenue growth guidance of 50%, driven by their commercial momentum and market adoption of the TriNav platform. However, due to these strategic investments, they don't expect to be adjusted EBITDA or cash flow positive in 2025.
EPS forecast and analyst expectations. Let's talk about the earnings per share. Analysts had forecasted an EPS of -$0.20, but the actual EPS came in at 39 cents. What does this mean for the company?
This larger-than-expected loss indicates that while TriSalus is making strategic investments for future growth, these are currently weighing on their bottom line. The miss on EPS suggests that the market may have underestimated the short-term financial impact of their aggressive expansion strategy.
How should investors interpret this?
Investors should view this as a necessary phase for long-term growth. The company's focus on expanding its market reach and product offerings is likely to pay off in the future, but it does come with short-term financial challenges.
Operational efficiencies and future outlook. John, let's discuss their operational efficiencies and future outlook. How is TriSalus managing its operations?
TriSalus has reduced its operating losses by $4.4 million compared to last year, thanks to increased sales and reduced R&D expenses. Their adjusted EBITDA loss also improved to $5.5 million from $10.4 million last year. They have a solid cash position of $13 million, bolstered by the recent $22 million private placement, which should support their operations through 2025.
And what about their future profitability?
TriSalus expects to be adjusted EBITDA positive in the first half of 2026. Their strategic investments are aimed at positioning the company for sustainable growth, and while they face short-term financial challenges, the long-term outlook remains positive.
Key takeaways. In summary, TriSalus Life Sciences has reported a strong revenue growth of 42% year over year, driven by strategic investments and market expansion. However, they missed the EPS forecast with a loss of -39 cents compared to the expected 20 cents. Their recent $22 million private placement is a testament to their commitment to long-term growth with profitability expected in 2026. Thank you for joining us, John.
Thank you for having me. It's an exciting time for TriSalus as they continue to innovate and expand their market presence.
Thank you to our viewers for watching. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TriSalus performance in the comments below. Until next time.